Welcome back to the Wall Street Podcast. Today we're doing a deep dive into a new Goldman Sachs Asia report. It's called Navigating China Internet, Top AI Apps Tracker. And it just came out August 13th, 2025. It really unpacks the July 2025 China internet scene, looking at AI model upgrades, ARR trends, the chip supply situation, and just general mobile app usage.
Right. And what's useful here is how it ties all these different threads together, AI, infrastructure, user behavior, into one strategic picture for China's digital space. AI is clearly a major focus.
Precisely. So let's start with those AI developments. A big one for investors is still chip supply, isn't it?
Absolutely. The report digs into the NVIDIA H20 supply dynamics, potential U.S. sales coming back online, talks with the Cyberspace Administration of China. It's all quite fluid.
And how does that connect to, say, infrastructure spending?
Well, China's cloud service providers, the CSPs, they're forecasting a pretty significant 42% jump quarter over quarter in their capital spending for Q3.
42%, wow.
Yeah, it shows they're serious about building out AI cloud capacity, even with the chip uncertainties. It's a proactive stance.
Okay. Now, what about the AI models themselves, performance-wise?
That's another interesting area. The gap between, say, top U.S. models like OpenAI's GPT-5 and the leading Chinese ones, think Zhipu's GLM 4.5 or Alibaba's Qwen, it seems to be narrowing.
Narrowing how?
We're seeing smaller incremental breakthroughs, fewer hallucinations, better coding abilities, solid progress.
Which brings us to monetization. And multimodal AI seems to be a big theme.
Very much so,
Oh,
especially after Google's Genie 3. But here's a striking figure. 80% of the annual recurring revenue, the ARR, for China's AI applications, actually comes from overseas.
80%. Mostly from what?
Primarily video generation and image editing tools. Though it's important context that this still only represents about 5% of the total global AI application revenue.
So domestically, how are users engaging with AI then, if the money's overseas?
We're seeing a shift. Standalone consumer AI chatbots. Their engagement actually dipped about 6% month over month in July. DeepSeek down 10%, Dubao down 13%.
So people are losing interest.
Not necessarily. It looks more like AI functions are just getting baked into the big super apps everyone already uses.
Like Alibaba's AI native AMAP or Douyin's AI search.
Exactly. Douyin AI search already has over 210 million monthly active users, so the interaction is moving. And conversely, on the business side, the 2B adoption, that's accelerating fast. Token usage is way up, like over 400% year over year in some cases.
Interesting contrast. And outside of pure AI, what's the overall app engagement picture look like?
Pretty healthy, actually. Total time spent on the top 400 mobile apps in China was up 6% year over year in July.
Any particular bright spots?
E-commerce saw strong growth, up 14% year over year. JD had a massive 76% jump, Taobao up 11%. And local services were also robust, up 18%, with Meituan and AMAP showing really solid gains.
So the digital economy seems quite resilient overall.
Yes, and AI integration seems to be enhancing these platforms, not really pulling users away into separate AI worlds, domestically at least.
Okay, let's pivot to some key questions arising from this. First module, chip supply and infrastructure. What's the real strategic outlook here, and how is it shaping cloud investment?
Well, the strategic outlook seems focused on building resilience. Despite the ongoing uncertainties around supply, that big 42% planned increase in CSP CapEx, it signals a strong commitment to building out domestic AI cloud capabilities, almost certainly to reduce reliance on external factors long-term.
Got it. Module 2, domestic AI model competitiveness. How genuinely competitive are these Chinese models globally now, and what does their rapid progress mean?
They're becoming genuinely competitive, especially in practical areas like coding accuracy and reducing those AI hallucinations. The implication is a more diverse global AI landscape. It's not just about catching up anymore. They're contributing distinct strengths, pushing innovation forward globally.
Makes sense. And Module 3, monetization and user behavior. Where's the real money coming from for Chinese AI, and how is consumer interaction fundamentally changing inside China?
As we touched on, the revenue is heavily skewed overseas right now, particularly for those creative tools. Domestically, the trend is clear. AI is becoming less of a standalone destination and more of an integrated utility. It's embedded in maps, search, e-commerce, fundamentally changing how people encounter AI daily, often without explicitly seeking out an AI app.
So the big public impact takeaway seems to be this seamless integration, right? AI isn't necessarily a separate thing you go to anymore.
Exactly. It's becoming part of the plumbing of the digital platforms people already rely on.
Yeah.
An invisible enhancer in many ways.
So as a final thought for you, our listeners, Consider how this deep integration of AI into our everyday digital tools won't just drive future tech investments, but could fundamentally reshape how we all interact digitally across the globe.